It's always a pleasure to speak with IRA Club investors. Back when me and my team were kind of breaking off from the old life settlement companies we represented back in 2015, 2016, we, improved upon not only the products, but all of our affiliates we worked with. And so part of that process was shopping self-directed IRA providers. So whether you came to IRA Club by accident or whether you did your homework and kicked the tires on all these places to find that IRA Club really is certainly one of the best. Their customer service is just fantastic. I love that I can get anyone on the phone. Ramez is absolutely right. They're always innovating. Nowadays, you can get their paperwork done through their website, which is unique and interesting. We, of course, like to stay in control, so we'll handle the paperwork for you whenever you're interested in investing through us. This is actually sort of investing in other people's death benefit claims. Okay, so that's the whole thing in a nutshell, but we're going to flesh that out so that it starts to really make sense. And as I said, I love speaking with IRA Club investors because you're already familiar with alternative investments. These are some of the biggest places that we have our money today. So, this is an alternative investment. We mean an alternative to the big stocks, bonds, mutual funds, even alternative to real estate. And the reason why is because this will make money for you in an entirely different way. Okay. The risk profile is completely different. So when you have your other investments suffering, like we saw in 2008, maybe I look too young to be an investor during 2008. I'm almost 36, by the way, in case you were wondering. But I have on my screen here, this is the 2008 time period. And this is still, fresh, I'm sure, in many of our minds, where the stock market was just up and down, not to say anything about unemployment numbers, et cetera, but if you opened up your 401k, there could be a period for 6 or 7 years during this 2000 period where you were actually down for 6 or 7 full years. And then again, from the high in 2008 for another 6 or 7 years, you were down. So they call this the lost decade because you could have potentially been flat for a full 10 or more years. Okay, so this whole idea that the stock market is just a place where you can park your money and reliably make whatever they're advertising nowadays, 7, 9, 11% APR. I mean, even currently, I did this chart 2 or 3 days ago. This is the last 4 years. This is April 21 to April 25. About tax day to tax day, you can see you're only up about 29%, which is a 6.5% APR. And this is if we don't go down further, right? Which people are scared about right now. All this tariff stuff, you can see these violent up and down moves. Okay, that's the stock market. Other alternatives, CDs, bonds, these tend to be relatively low yield devices. Okay, not that there aren't benefits to those products that we can say they're guaranteed annuities, we can say guaranteed income. That's fantastic. But what if you want something that's going to make money even when all of those other things are failing? Okay, something that's totally non-correlated. That's when we're talking about life settlements. Okay, why? Because life settlements make money exclusively based on the death benefits when other people pass away. Okay, so what is Life Asset all about? It's about making other people's death benefit claims eminently accessible to you so that you can place an investment through your IRA Club account, cash, or your IRA Club account. The payouts come back to your IRA Club account. When that payout happens, it's not a taxable event. You can then reinvest it, you can transfer it, you can put it in something else on Investors Row. And only, of course, just like anything else in your IRA, only when you pull out money from your IRA does that create a taxable event. Okay.
I just want to
So,
confirm, Barry,
yeah.
you're not sharing a screen right now, are you? Just to confirm. Because
No,
it
not
just,
necessarily, no.
oh, okay. I just want to make sure somebody in the
Yeah.
chat just asked, is he still sharing his screen? Just wanted to confirm.
Yeah. I'll have some slides as we go along. I think like Ramez mentioned, if you're on here, you probably have never heard of a life settlement. What do you mean I can own other people's death benefits? Okay. So if we share screen, let's just build some credibility for this. And this kind of answers the whole is it legal question. Trust me, we are beyond the is it legal question. We're talking about huge institutions investing in life settlements. This is London School of Business talking about institutions making about 11%. Any of these articles I can send you after the presentation, but everyone's favorite investor, Warren Buffett, Berkshire Hathaway, everyone knows, huge holding company, has purchased life settlement companies in the past. So they've invested thereby over $1 billion in life settlements. Other huge firms like Bank of America, Chase Bank, even New Zealand's pension fund and Yale's endowment fund all own hundreds of billions of dollars collectively of life settlements, not to mention the huge hedge funds like Blackstone and BlackRock. So these are a very well-known instrument in the institutional space. And where life asset comes in is that we make it accessible to the everyday investor. Again, so that you don't need to know any of the back end stuff. You put your money in, you see exactly how much death benefit you own for that money, and you then get paid out as soon as anyone in the pool of policies passes away. Okay. So um, let's take a few questions in the chat. I just want to make sure you all have the basic understanding, and then I'd be happy to get into kind of the numbers. We can kind of look at like, well, how does this stack up compared to some other things? Things like that, any kind of nitty gritty. But
Do
before
you mind
we,
if I chime in? Do
yeah,
you mind if I chime? Because
absolutely, Ramesh. Yeah, go
I'm
ahead.
gonna go in the eyes of pretending that my IRA club, clients and members are
Yes.
sitting here asking because I was just
Yeah.
like you one day, right? So 6 years ago,
Yeah.
what you need to understand is when it comes to using your IRAs or solo 401ks or HSAs, by the way, all Barry, correct me if I'm wrong, all qualified plans that could invest in a life insurance policy, right?
Yes. Yeah, we could do solo 401k, traditional Roth, SEP, you name it, we can do it.
Okay. So your IRA is investing in the death policy, right? Correct me if I'm wrong. And it's
Yep.
a and the best way for me to break this down for people is you're not investing in just one, right? Not one, but a pool of life settlements. Correct me if I'm wrong.
Yes.
Okay. So
Yes.
so with that being said,
Yes. Okay. So yeah, I see Cash's question,
oh,
HSA. We answered that. Great. William, that's a fantastic question. I can see you know a thing or two about
oh,
life settlements because Life Partners was a well-known life settlement company that actually failed. So there have been a number of companies in the life settlement space that have like offered guaranteed returns on a fixed terms basis. So rather than simply being paid out your death benefit claim when a policy matures, how polite is that when a policy matures? Okay, for anyone in the back, that means when someone dies, we collect their death benefit claim. When a policy matures, you're getting paid out. That means if a policy pays out tomorrow, you're getting paid very quickly. You're making your whole death benefit claim extremely quickly. You might make a triple digit APR on that policy. Okay. But if we have a policy that lives, 10, 12 years, you might only make a 4 or 6% APR on that policy. So that's why it'll all kind of average out to a decent return in our model. But with these other companies that unfortunately found out it's a little bit harder to predict the future than they thought, when they are offering, a fixed 10% APR or something like that over time, and then they have a little slump where they're not getting policy maturities exactly according to their statistics, they're not able to pay investors, and then all of a sudden the whole thing comes crashing down. Okay. So that's how we avoid getting into trouble like they did. Irma, good question. This is a life settlement company. So a life Settlement is once a life insurance policy is repurchased by someone else. Okay. The original insured receives cash. Now we own the death benefit. You can purchase the death benefit, and away we go. It's the same insured, but they don't own the death benefit claim anymore. You do. Okay. How do we find the policies? That's a great question. We purchase our policies from licensed providers and funds. There are relatively few in number. They are large companies that this is all they do, and institutions purchase policies from the same sources. So it's actually sort of an auction, sort of a bidding market. Imagine like a life settlement eBay, where we do our due diligence. Our policy acquisition guy is typically looking at 150 policies a month. He's selecting just 2 or 3 a month for our offerings. And that's based on, we want them to have a certain premium schedule. We want them to be in a certain age. We want them to, we actually run life expectancy reports. We put it through a third-party company. If that life expectancy comes back in a favorable way for us, meaning let's just say the insured really needs the money, right? Because they're in worse than average health. Those are the kinds of things that is going to make that a more desirable policy. Once we've done our homework, spent the money to find out, we know that's a good policy and we're willing to bid to acquire that policy. Okay.
One person, Barry, asks in the private chat to me, what are the fees associated?
Yeah, good question. So it's IRA Club's regular fees. Beyond that, our product is what we consider a no load product. There's no management fee that comes out. Let's just kind of dig into an example, and this will start to make sense. But you'll see that we make our money up front. Okay, here's our current offering. This is Life Asset Portfolio 1. You can see face amount 3.9 million. Okay. And I'll let you kind of digest this slide as I talk about how we make our money. How can we not charge you a management fee? We own 3.9 million. We can sell that 3.9 million to you for 3 million and we'd make a lot of money. But you're not interested in buying because the return is too low. Okay. So we could sell that 3.9 million for $1 million. And then you would make a killing on that when the death benefits come in, but we're out of business. Okay, so the sweet spot is we sell that 3.9 million for a 77% estimated return or so that we're selling this 3.9 million for about 2.2 million. Okay, and that's enough to pay for our expenses, make a little profit, and that there's still enough of a spread in there for you to make your estimated return. Okay. Okay, so just to go through a few more numbers, this being our current offering, if you understand this page and the next page, you basically understand the whole thing. So you can see in 6 policies, insureds in their 70s and 80s. I believe these are all A-rated carriers. I might be mistaken if Genworth is like a B+ carrier, but these are all highly rated multi-billion-dollar companies. These are all permanent policies that are beyond the contestable period. Therefore, these policies will pay out for any cause of death. It doesn't matter if there's suicide or anything like that. You can see life expectancy in months, as I alluded to. This is a life expectancy estimate that is drawn up by a licensed third-party company. And then we have the estimated returns. So how much you're going to make on a per policy basis. Okay, so we can come back to this slide, but this one is exactly how your investment breaks down. I said from the beginning how much death benefit you have in each policy. You just don't know exactly when it's going to pay out. Of course, life expectancies cannot be guaranteed for obvious reasons. And we've had policies pay out, within 6 months. I think 3 months was the record for someone to get paid out from the time they invested. So you can make your 78% in, 3 months, and then your APR is like over 300% or something. But again, if that person passes away, closer to the life expectancy date of 78 months, you're making about 78% in about 78 months. Okay. So if you do the math, that's 1% per month of life expectancy. That's a 12% simple APR. So if everyone were to pass away exactly on their life expectancy, you'd be making about a 9 or 10% APR. Okay. Is everyone going to pass away on their life expectancy? Absolutely not. And that's why we have these disclaimers in here. Of course, life expectancies cannot be guaranteed. The professionals we rely on cannot be assumed to have a crystal ball or know the future either. But we do our best. We diversify across multiple policies. And again, if you're considering moving something that you have that is at risk in the markets, and I say markets plural, we're talking about stock, bond, or real estate, this is something that will pay out regardless of what's happening there. So,
Question.
uh, yeah, yeah, go
So
ahead.
sorry, a client is asking, so these are all full paid cash value life insurance policies?
The policies may or may not have a cash value, but I think the real question is whether these are permanent and can we rely on them to pay out, or whether they can term out. Some people don't know, but term policy can be a great policy for your personal insurance, but more than 99% of term policies never pay out. Okay, that's why we have no term policies. We only have permanent policies that are beyond the 2-year contestability period, so they will pay out for any cause of death. And even if these people live to 100, they're still,
Two questions popped up in the chat. Gary, how are you, buddy? It's always a pleasure. Did you can you see those in the chat? I'm not sure if this is a
Okay,
private
yeah.
chat.
What got it? What payout percentage has your fund averaged the last 3 years? So good question. I can pull up our policy maturity history with these type of offerings. Now, what I will say is you might think it's totally unbelievable. The reason is it's almost too good to be true. And the reason for that is that we started these offerings in 2018. And we have a lot of policies with a life expectancy beyond 6 or 7 years. And we have a lot of policies that have not matured yet. So if I pull up our policy maturity history, we can see I actually just added this one now. This one is going to pay out within probably a month or two. We have APR realized over 40% on about $7.4 million. Am I advertising that you're going to make 40%? Absolutely not. We have investors that are late in the game. Most of their policies in the offerings have matured, and I think it is highly likely at this point, looking at the numbers, that they will earn about 8 to 10%. Okay. Again, that's on select offerings. Any given offering could theoretically do even 4 or 5%. And I think it's likely on the other side, we'll have more above that target range. We can have an offering do 10 to 12%. It again just matters when the insureds actually pass away. And we have some policies that have done freakishly well to set the whole portfolio up in a very good way. Okay, is there a minimum buy-in? We have $25,000 minimum. I hope that is accessible. Yes, you do have to purchase all 6 policies. So this is not a pick and choose situation. And everyone gets the same deal. So don't worry, there's no favoritism here. It's just that when you put in your 25K, we put more into the $1 million policy than the $105,000 policy. Also, the $105,000 policy has a shorter life expectancy. So, it's all proportional. If you're purchasing 1% of the fund, you're purchasing 1% of each policy. Okay. Is this SEC registered? I know Ramez we were talking just a few minutes before. Hey, Barry, I know investors have seen Equity Life on Investors Row. They've seen our past webinars with Equity Life. Why is this one called Life Asset? What happened to Equity Life? It's all the same stuff, okay? But we are now offering 506C Reg D offerings. Okay, what does that mean? That means that these are SEC regulated investments such that they are offered through private placement memorandum. Hopefully, some of these terms are making sense. I don't want to get too jargony, but the point is that you have to be accredited. You will have to prove you're accredited with us to satisfy the SEC, and that we can market to anyone we want to. Okay, so we had to kind of rebrand the image, new logo, etc. But we're talking all the same offerings. Okay. Who would be listed as the owners of the policies? So in this case, Life Asset Portfolio One LLC is the owner. That's who's on file with the life insurance carriers. You cannot just call the life insurance carrier, "Hi, I'm John Smith. I invested with Life Asset. I want to make sure my name is on it." Unfortunately, they'll say, "We don't know what you're talking about." Even if you have the policy number, they'll say, "That's not your policy." The reason is because you own 1% or 2% of Life Asset Portfolio One. So that's why we have investment paperwork this thick. It obligates us to pay you 1 or 2% of all proceeds, so that when a policy maturity comes in, that's your money. There's nothing we can do with it except pay you out. Okay. So good question. Really quickly, what criteria do you need to be an accredited investor? From Hannah, this may apply to other IRA club investments as well, but you have to have either $1 million net worth, or you have to have an income of 200,000 plus. That's 300,000 plus if you're married filing jointly on your taxes.
By the
Yeah.
way, that million does not include your primary residence, just to be clear.
That's right. That's right. That's right. Yep. So to be an accredited investor, anyone outside of California, we will need to satisfy the SEC by proving your accredited status.
What final thoughts would you have to IRA club clients? If there's anything that you want to say, or last
Yeah.
second,
Yeah. Everyone's talking about tariffs, this or that. What's the trigger for the next big stock thing? Everyone has their own opinion, but fewer and fewer are the people that think that some major stock event will not happen at some point. Even Goldman Sachs came out with a study recently. I'll send you the article. It's almost hard to believe, but I will send you the article. They say with 95% certainty over the next 10 years, you're unlikely to make more than 3% APR in the stock market. Okay. Life settlements will perform anyway, and I want you to be protected. I want to see you do well. This is a great way to help preserve your wealth in these extremely difficult markets. Okay.
guys, until next time, Barry, such a pleasure. Thank you,
All
sir.
right. Thanks, Ramez.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.